Okay, well, let's start by looking this week at the stock market, and then we'll look at silver and commodities and whatnot, and a few other things. Let's start by zooming all the way out onto the monthly. On the monthly, this looks extraordinarily bullish. We had the pullback from high to low, 9 months, 10 months, nearly a year. And in between that we've had an unreal amount of fuckery and fucking around. If we include the consolidation period, so from the high through to all the action that's underneath this line, a year and 4 months, a year and 3 months of either decline or chop and fuckery basically. This is a neckline we've broken out. We had to go once, we had to go twice and put in a doji, and now it looks like potentially we've broken out. And it looks to me like, I mean, it's blue skies ahead. It's new all-time highs. We crossed over on the monthly momentum of price volume trend a while ago, all the way back here. Look, this blue candle here. But then obviously you've spent 1, 2, 3, 4 months getting chopped out from that signal as it revisited the breakout signal. And again, there's your head, left shoulder, right shoulder, neckline on RSI, and it's all looking tremendously bullish. Let's go further out onto the quarterly. Well, if it doesn't fail here, it's going to go up a lot higher, it looks like to me. This trend from the 2008 low, 2009 low, we're still in the channel. We're still in the channel. Let's go down to the weekly. There's the breakout again, it's slightly more detail. We didn't come down to this VWAP here from where's that supposed to be from? Well, that's a weekly anyway, but it doesn't really matter. But we can see where the resistance have been. It's been this VWAP. Every other time we closed above it, it was ahead. It was ahead. It was ahead. It wasn't ahead, and we've gone up higher. So that's a signal that here was reliable short, here was reliable short, here was reliable short, here was not reliable short. So we've flipped. The meaning of the same price action has flipped from bearish to bullish, indicative of a change in trend. Of course, it's breaking out at highs, so I mean, if you bought the breakout of this neckline, if you were lucky, you got in on the wick. I didn't. I'm right in at the highs here. It's not good to buy high. It's not good to buy high. But yeah. It is, as they say these days, what it is. You can see on the daily that looks more overextended. Clear breakout though. RSI is high. You can see the VWAP from the low here. We came underneath it, above it. We came underneath it, above it. Here's the flip of the other. Is that another VWAP? It is. It is. It's two. I've got 2 anchored VWAPs. One from, I'm guessing, the COVID crash low. One from the top. And I suppose I put in one from the bottom here. Yep. It's a good job the longer time frames look so good, because obviously this is a very high spot to be buying. But it's relative to where it might end up in the future, I suppose. And in support of that, if we look at the stock market charts and breadth and so on, if we look at those, so yeah, we've got across over the 14 on cumulative NIAD. We had the histogram on momentum fading into these lows, retesting this zone here, not in price but on cumulative NIAD. So that's whether you like it or not. Mechanically speaking, it's a buy signal. We're back up at 85, huge reading on Ringier. Not characteristic of bearish action. It's this kind of range we get into during bull markets. NEHL, we've crossed over the zero line again. The last time we didn't get a big turn down, we flagged out and then went up. Every other time we got a little cross over the zero line, it was ahead. We crossed over the zero line, it was a little head here. Crossed over the zero line, it was a little head and shoulder thing here. This time we crossed over the zero line, it was sustained, we flagged out and then broke out, and all this action under the zero line has been met with increasing in price. And again, we're over the zero line and we're seeing higher price action. Momentum has crossed. Pure mechanical read, bullish. Percent of S&P stocks over the 50. It's tested much deeper than price has done. So the indicator has moved lower, but price is continuing up, and now the indicator is following. Again, prima facie, seems to me to be bullish. The dollar is a mixed bag. I mean, it's fucked if I know, to be honest. But what I was really concerned about was silver. So I made lots of money on this run up. I lost it all on the way down, and now I'm back to square one. And until we break over this blue trend line, until it gets back over 23.86, silver cannot be trusted. Silver cannot be trusted, and it's a nightmare to trade anyway, if I'm honest. And the amount of hope I had wrapped up in this thing was unhealthy. Unhealthy amount of hope. The breakout's coming, the breakout's coming. 40, 50, 60, $60 silver, it's coming, it's coming, it's coming, it's coming. For like 3 years. You know. But yeah. You can say, well, sort of a negative reversal. Maybe not quite. In any case, bonk right at the 50, bonk right at resistance. We get over that, maybe it is off to the market. Until it is, ignore. Crude, plunging these lows again. Let's go on the weekly. Just it's pushing down and spiking up in this area that made the highs and the lows all the way back in 2021. And nothing decisive is really happening. It's under the 14s on the weekly. We're under the 50 on RSI. We've crossed under on momentum price volume trend. We found the spike support here on these long-term trend lines. Well, it's just a mess though, isn't it? Let's be honest. I'm actually going to get rid of that channel because I don't like it. The daily looks a little bit nicer, but maybe if we keep going up, through this resistance, and if we can keep above maybe like 70.28, 70.30, something like that, you could try for a buy. If we look at the oil stuff in terms of ratio charts or whatever, here we go. It's just nips over the 14 here, and the ratio against dollar Canadian. Momentum has maybe just crossed positive, so we're under the 14. Just, you know, it's just chopping, about a $10 range, chopping under the 14, just choppy, no real clear signals. That's what I'm getting from crude. It's still showing us that it's a bit of a mess, basically. Uranium. This is another one of those assets where people have been saying for fucking donkey's years, it's you know, if we look at the history of this ETF, I mean, look at it, 13,000, and here we are at this level. And we're at all kinds of resistances. We get above this, we'll probably have a run to 3,200 again, up to these highs maybe. But we've got to break through all this first. You can see that long-term weekly wedging action. Just chop, 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 stab, stab, all the way back into, you know, all the people, all the poor people, all the people buying down here. All of them, you know, they did the right thing. They were buying low. They were buying in like the 1900 area, and then, you know, so many of them will have got stopped out by this. But we've got the positive cross here. We back tested the breakout of this. You know, it looks like we ignored it for a bit, went down, but then we tested it again. Nip on the underside, up. Monthly. Again, if we get over that level, 2130, whatever, it will look very good. But we're right at resistance. That was a heck of a move. So it could be maybe fine. Maybe it is finally doing it. Maybe it is going to finally be the uranium run of the world, and I'll feel like a dum-dum for being in long S&P. Semiconductors. Look at this. Already. Well, this is kind of an aberrational print. I don't know if this actually happened. That's kind of ludicrous. But we're very close to. If we ignore this print, if we assume that's a freak print, freak price action that, you know, probably shouldn't be there, we're nearly breaking out to new all-time highs in semiconductors. High yield on the weekly. You know, you can see it's trying to stage a bit of a recovery from these lows down here. Doesn't look too bad. Bonds, neither here nor there, chopping around, chopping out, looking bad. Again, if this turns down here, that's bad for silver. This would be higher rates, this would be low rates. Agriculturals have picked up. Right in here, right in this little nook here, you've got your positive divergence on here. And up we go. Maybe it's going to be another bad year for agriculturals in terms of food getting a lot more expensive, but that of course will make this go up a lot. So if you want to be able to buy food, maybe you should buy this ETF. Wheat, same difference. Huge divergences coming in here. Channel breakdown, back in, channel breakdown, back in, into resistance. So as long as we're not going to come down below 619 again, maybe this is indicative of a turn. Is there anything else worth looking at? Natural gas. Yeah, it's not getting above this rail. It stabbed it a few times, but it's not getting above this rail yet. Maybe we need to go lower. Maybe. Kind of a mess, let's be honest. You could probably trade it on shorter time frames, but yeah, at the moment it's a bit of a mess. There's positive reversal play on both indicators here as long as we hold the low. On a closing basis on daily at 22.06, so that would be worth a long shot here. And I think that's it. How's the euro doing? Shit. Alright, so I think that wraps it up.